Okay, so let's start with this chapter now, standard costing. From examination point of view, I'll say very important. 99.9999% you will get a question from standard costing, right? I don't think so there is any attempt in which the standard costing question has not been asked. I don't remember any attempt in which the standard costing is not asked. So that is the importance of this particular chapter. Basically we'll be covering 4 variances: material variance, labor variance, variable overhead variance and the fixed overhead variance. These are the variances which are there in your syllabus. Sales variances are not there in your syllabus as of now, right? Sales variance earlier they used to be there, but now the sales variances are not there. Okay, let's start with illustration number 1, and we will be preparing the table in the normal way as we have learned the preparation for every question. Where the table is not given by the institute, we will prepare the table. Wherever the institute table is good enough, I will explain it from there only. Okay, come to illustration number 1 now on the material variance. Very simple illustration. The standard and the actual figures of the product Z are as under. Standard is given material quantity 50 units, actual is 45 units, material price per unit is given, standard and actual. Calculate the material cost variances. So what will be the table? The table is standard quantity for actual output, right? Then we have the standard rate, then we have the standard cost, actual quantity, actual rate and the actual cost. So in this particular question, actual output is not given. So what we assume is that whatever is the data given, that is for actual output itself, right? So we'll take here standard quantity 50. What is the rate here? 1 rupee. So standard cost will be 50. Actual quantity 45 and 0.80. 45 and 0.80. That is 36. Simple. That's it. That's the table. Now if you want to calculate the cost variance, sir, what will be the material cost variance? That will be 36 minus 50, 14 adverse, right? What will be the material price variance? That will be standard price 1 minus actual price 0.80. Here now write, instead of rate, write price. Rate we normally use it for labor, right? Multiplied by what? Multiplied by actual quantity, that is 45. So that is 0.80. That comes to 9 favorable. Material quantity variance, that is standard quantity 50, actual quantity is, oh sorry sir, sorry, here it is standard minus actual, that's why I'm saying 14 favorable, sorry, 50 minus 45 into 1, that is 5 favorable, right? So the sum total of this two will be equal to this. Clear? Done, sir. First question done. Hmm. 14 favorable है. Any doubts in question 1? This was the simplest of the question, just the very basic question, sir. Sir, in standard costing also the attendance is so low. What happened, guys? इतना आसान लग रहा है चैप्टर स्टैंडर्ड कॉस्टिंग. Only 17-18 people are there. Please keep preparing the table side by side. That's important. Okay. That will help you during your revision also, when you will write these questions again or revise the questions again. At that point of time, these tables will help you. Okay, let's move on to illustration number 2. NXE manufacturing concern furnishes the following information Standards are given. Material for 70 kg of finished product, 100 kg of the material is utilized, right? For making 70 kg of the finished product, 100 kg is required. Price of the material is given 1 rupee per kg. This is the standard. Actual is output 2,10,000 kg. Material used is 2,80,000 kg, and the cost of material is used, that is 2,52,000. Calculate usage variance, price variance, and the cost variance. Let's prepare the table. Standard quantity for actual output, standard price, standard cost. Actual quantity, actual price, and actual cost. What is the standard quantity for actual output here? The actual output here is 2,10,000 kg. And what is the standard quantity here now? He says for 70 kg of finished product, how much of the raw material is required? 100 kg. So if the actual output, if actual finished product is 2,10,000 kg, so what will be the standard material that will be required? What will be the standard material that will be required, sir? That is 3 lakh. What is the standard price? 1. Standard cost 3 lakh. Actual quantity is 2,80,000 and actual cost is 2,52,000. So what is the actual price? 2,52,000 divided by 2,80,000, that is 0.9. Clear? So from here, this is the calculation for this. From here now you can calculate easily the cost variance, price variance. What will be the material cost variance? That is standard cost 3 lakh minus actual cost 2,52,000, that is 48,000 favorable. What will be the material price variance? That is standard price minus actual price into actual quantity, 28,000 favorable. And material quantity variance, standard quantity is 3 lakh, actual quantity utilized is 2,80,000 multiplied by standard rate 1, that is 20,000 favorable. Any doubts in question number 2? And guys, the RTPs have also been released for group 2 CA intermediate for costing FM. The RTPs have arrived. हाँ कर सकते हो प्रीतम, कर सकते हो. कर सकते हो शॉर्ट फॉर्म्स, कोई दिक्कत नहीं है. दीज आर द स्टैंडर्ड शॉर्ट फॉर्म्स. ठीक है, ये स्टैंडर्ड शॉर्ट फॉर्म्स हैं, तो आप एग्जाम में यूज़ कर सकते हो, क्योंकि आई हैव सीन द मार्कशीट्स जहाँ पर शॉर्ट फॉर्म्स यूज़ की गई हैं और फुल मार्क्स मिले हैं, कोई दिक्कत नहीं है उसमें. Okay, any doubts in question number 2, illustration number 2? Any doubts? Clear? Rest of the people, please let me know any doubts in this particular illustration. I think the mock test schedule is not yet out. The mock test schedule is not yet out. It will be announced. I think it will be somewhere in this, by the end of this month or in August, the mock tests will be there. So RTPs and mock test also will discuss, don't worry. We'll have the live session specifically for RTPs, and RTP though we'll discuss at the end of this particular sessions. After this completion, we will have a live session on RTPs, and whenever the mock tests are available, we'll have a session on mock test also. Okay, let's move on to illustration number 3 now. So this illustration number 2 is definitely important, sir. Right? Let's come to third illustration. Mark it as very, very important, because this kind of illustration number 3, a similar illustration with small variations. It has been asked n number of times in the examination, n number of times, right? It is uncountable how many times a similar illustration with the change of figures it has been asked in the examination. It is one of the favorite illustrations, right? The standard cost for a chemical mixture is as follows: 40% of material A at rupees 20 per kg and 60% of material B is rupees 30 per kg. This is the standard composition that is given. कोई इशू नहीं है प्रीतम, एब्सोल्युटली नो इशू. बनाकर आओ, टेबल बनाकर आओ, बेस्ट है. Right, so this is what is given, that whatever is the standard quantity required, in that standard total quantity 40% of the material A is to be used and 60% of the material B is to be used. This is the standards which are given. A standard loss of 10% of the input is expected in the production. The cost records for the period showed the following usage. Standard loss of 10% of input means that whatever you will input, out of that 10% will be lost during the production and remaining 90% will be your finished output. Okay, so the actual data is given now. The actual data says 90 kg of the material A has been utilized at the rate of 18 per kg and 110 kg of the material B has been utilized at the cost of rupees 34 per kg, right? The quantity produced was 182 kg of the good product. Clear? 182 kg of the good product. Calculate the material cost variance, material price variance and material usage variance. First and the foremost thing here, sir, when he says 182 kg of the finished output has been manufactured, that is, this is after a loss of 10%. So we need to find out that what is the actual input, what is the total standards for the actual output. When we talk about here the standard quantity, total standard quantity for actual output. So what will be that, sir? He says the standard quantity of the material is you will input X quantity. This is the standard. Standard says you will input X quantity, out of that there will be a 10% loss on the X quantity, and after the loss what you will get is the actual output 182. So for this actual output of 182, what is the standard quantity total that you will input, sir? Right, so that is 0.90x is equal to 182, x is equal to 182 divided by 0.90, that will be 202, rounded off. Clear? So this is what is the standard quantity, because if you see now for material A, the percentage is given, the how much is the standard quantity to be utilized, it is not given. He says whatever is the total standard quantity to be input, 40% will be material A, 60% will be material B, right? So this is what we have calculated. This is the total standard quantity for the actual output, because you will input more, after a 10% loss you will get the actual quantity, right? Now we will prepare the table here, sir, that is standard quantity for actual output, standard price, standard cost, actual quantity, actual price and actual cost, and then we can have the revised standard quantity also. Why we can have revised standard quantity? Because wherever there is more than one raw material being used, there we can have the revised standard quantity. So here we have two raw materials being utilized, that is A and B, right? So the total standard quantity is 202. This 202 will be distributed as 40% for A and 60% for B. That will be 81 we will take up here and 121 we will take up here. I don't want to see that table, AK. That table is different. That table is different. I want to prepare my table 20 and 30. Standard price is 20 and 30. 81 into 20, that is 1620. and 121 into 30, that is 3630. So what is the total cost here? Plus 1620, total is 5250, right? Then actual quantity is given 90 and 110. Actual quantity is given 90 and 110, and the actual price is 18 and 34, I guess. Yes, 34, right? This is total 200 being utilized. 90 into 18, that is 1620. Okay, 110 into 34, that is 3740. So total is plus 1620, 5360. Now, what is the revised standard quantity? Revised standard quantity is distribution of actual quantity in the standard ratio. So revised standard quantity is what? Revised standard quantity, we call it as distribution of, it is what? The distribution of actual quantity in standard proportion. Remember the Lalaji, right? This is what is the role of Lalaji here. Yes, actually this tabular form makes it very easy. So the standard quantity 200 being distributed in the ratio of 40:60, sir, right? So that will be 80 and 120. Now you can calculate all the variances. Whatever the variances are required, you can calculate each and everything. For this particular illustration, do not see the ICAI solution. Do not see it. They have done it in a different way. I don't want to see that solution, sir. This solution is 101% perfect, and in that this will be your working note. This will be your working note, sir. Even the institute in their suggested answers, in RTPs, in MTPs, everywhere they are using this particular methodology. They are using this solution. So we will not go with the ICI solution. We will not go with what is given in the book. Please, in these kind of questions where more than one raw material is being used, there is a loss also, right? There is a loss that is given. Please use this methodology only. Calculate the standard quantity for actual output, right, as a working note, and then prepare the table. Any doubts in this illustration number 3? Please let me know if there are any doubts, guys. Quickly, so that we can move on to the next question. I myself will tell you wherever this institute table will be good now, I will tell you, right? Don't worry. Wherever the institute table will not work, I'll make the table. We will make the table. Not I, because we are a team now, right? So as a team, we will work together. It's a family, it's a team that we have to work together. Only I cannot do anything, only you alone cannot do anything. So anything that we want to achieve, we can do it all together. Okay, so let's move on to illustration number 4 now. Now this is your homework, that you have to calculate all the variances. In this particular question, they are not asking for the yield and the mix variance, so you can skip that, or you can even calculate that, right? That's your choice. Okay, come to illustration number 4 now. ABC Limited produces an article by blending two raw materials. It operates a standard costing system and the following standards have been set for the raw material. Material A and material B, standard mix is given 40% and 60%. Quantity is not given. It is the proportion in which they are to be mixed, it is given. Standard price is given. The standard loss in processing is 15%. During the April, the company produced 1700 kgs of the finished output. The position of stock and purchases for the month of April are as under. So stock on 1st of April is given, that is the opening stock is given to you, closing stock is given to you, and during the month the purchases are given to you 800 kg and the total value of the purchase is given. Okay, the opening stock of the material is valued at the standard price. He says this opening stock, if you want to take this opening stock now, this is to be valued at the standard price. At standard price means 4 and 3. Let's see. Let's prepare the table first. The first working note will be what is the total standard quantity for actual output. Right. So our first working note will be calculation of total standard quantity for actual output, right? So what is the actual output here? 1700 kg, sir. What is the standard loss here? That is 15%, right? So let the standard quantity input is X minus 15% loss on the X. You are getting the final output 1700 kg. So 0.85x is equal to 1700. From here, X is 1700 divided by 0.85, that is 2000 kg. So this is the total standard quantity for the actual output. Now we will prepare the table. Now we will prepare table, that is standard quantity for actual output, standard price, standard cost, actual quantity, actual price and actual cost, and revised standard quantity, right? So what is the material that we have? Material is A and B. A and B. What is the total standard quantity? That is 2000 kg. Now this 2000 kg is to be distributed in which ratio? The standard mixture is given to you, that is 40% and 60%. So that means this 2000 kg, the total standard quantity, it was planned to be distributed in 40:60, right? That is 800 kg, 800 and 1200. And what is the standard price that is given? 4 and 3, right? So that will be 3200 and 3600, right? So this is 6800. Clear? Now another interesting point here. Now actual quantity. Sir, which actual quantity is to be taken? When we talk about actual quantity here, we take what? We take the actual quantity consumed. Actual quantity consumed, right? So what is the consumption here? It is not given. The consumption is not given, but we can calculate consumption, sir. How you will calculate the consumption? So that will be your working note number 2. Working note number 2, calculation of actual material consumed. So what will be the consumption? That will be opening stock plus purchases minus the closing stock, right? So for A, for raw material A, what is the data that is given? Opening stock is 35, purchased is 800 minus 5, right? So 35 plus 800 minus 5. So how much it is? 35 plus 800 minus 5, that is 830 kg, right? So for B, correct, for B the consumption will be 40 plus 1200 minus 50, 40 plus 1200 minus 50, right? So that will be 40 plus 1200 minus 50, 1190. Clear? Now, another interesting point here, that sir, when we say 830 kg has been consumed, 830 kg has been consumed, so in this particular thing, we will assume that the consumption is taking place on the basis of FIFO method. The consumption is taking place on the basis of FIFO method. That means in this 830 kg, the first consumption will be this opening stock of 35 kg. The first consumption will be opening stock of 35 kg. The remaining 830 minus 35, that is 795 kg, is from this purchase. Clear? Next, 1190 kg. Sir, 40 kg is from the opening stock and the remaining 1150 kg is from the fresh purchase. So the consumption is taking place on which basis? The consumption is taking place on the FIFO basis. First in, first out. 35 units was the opening stock, so we are going to consume that first, and after that whatever is the consumption required, that will be from the fresh purchase. Sir, what is the requirement of bifurcation here now? 35 and 795. I'll write here actual quantity 35 and 795, and here I'll write how much? 40 and 1150. Okay, here I'll write 40 and 1150. Why I am writing it separately, sir? What is the purpose here? The purpose here is because of this line that is given. Sir, this line that is given, opening stock is valued at standard price. That means the actual price of the opening stock is equivalent to standard price. Okay, so here the opening stock is to be taken here at, this is actual price 4 and 3. Now, what is the actual price? For 795 and 1150, it is from the fresh purchase, right? It is from the fresh purchase. From the fresh purchase, what is the actual price? From here you will get to know the actual price. That is 3400 divided by 800, 4.25 is the actual price. 3000 divided by 1200, that is 2.5 is the actual price. 4.25 and 2.5. 4.25 and 2.5. Right? So what is the actual cost here? 140. Here 795 multiplied by 4.25. 795 multiplied by 4.25. That comes to 3378. Okay, Nitin, no problem. There is nothing to be sad in that. Just enjoy your group 1 preparation. Whatever you are doing, just do it by heart and enjoy that. Right? That's important. That's really important. So just cheer up, bring a smile on your face, and say to yourself that whatever I am preparing, I will give in my best in that. Right? Don't be sad in whatever you are doing. Be happy that God has given you this opportunity to study. God has given you the chance to prepare your examinations, to be on the higher level, to do this professional course. So be grateful and enjoy. Okay, that's important. Now, what will be the revised standard quantity? Come on, quickly tell me what will be the revised standard quantity, sir. Revised standard quantity I want to know from you people. Quickly tell me the revised standard quantity for material A and material B. Quickly tell me that. 808 and 1212, correct. So that means this is the distribution of 2020 in which ratio? In the ratio of 40% is to 60%. Absolutely correct. Well done. 12 total 2020. Right? Now your table is complete. In this particular table, one thing you have to see here, sir. One thing that you have to see here, when you are calculating the price variance. Preeti, your choice, decimal लेना है ले लो, नहीं लेना ना लो, कोई दिक्कत नहीं है. Institute doesn't matter in this. Oh, God bless you, Nitin. God bless you. Wishing you a very happy birthday in advance itself. God bless you, and may you achieve, may you get everything that you have dreamed of. May all your dreams come true. God bless you. Enjoy your birthday with a smile, and keep preparing for your examinations. Important. Now, one thing you have to be careful with while calculating the price variance, for this 35 units, there will be no variance because you are evaluating it at standard price only, right? For this 40 units, there will be no price variance because we are evaluating it at standard price. Clear? The price variance will be calculated for 795 and 1150 units only. 795 and 1150 units only. This you have to be careful about. Okay, you will be able to do this question. Everybody wish Nitin a very happy birthday in advance for tomorrow. Very good. 20th of July. Sure, Nitin, sure. All the best. Prepare well and do enjoy your birthday tomorrow. Do enjoy your birthday, right? Do not miss out on the enjoyment, right? Do enjoy it. For at least for a few hours you can enjoy it, and then you can spend the rest of the day in studying also, right? An hour or two, maybe with your family or whatever the way you want to celebrate, but do take out some time for the enjoyment also, for especially on the birthdays, right? It's one special day that you get in a whole year to enjoy, and so you should spend some time at least in whatever way, visit temple or whatever way you want to enjoy it, right? After wishing Nitin everybody happy birthday, please tell me if illustration number 4 is clear. It's good, right? The light moments are always good in between the lectures. Actually, today I also celebrated birthday, not my birthday, but my better half's birthday today. So I actually wanted to call the today's class off. I wanted to keep today's class off, but yesterday I had to keep it off because yesterday the whole day was so hectic. I was badly tired. I was in no shape to take the class. So today anyhow I could not miss the class. But even the simplest of celebrations are good. Clear. Good. Okay, so now with this, सबका एग्जाम क्लियर हो, ग्रेट. द बेस्ट थिंग है ना, द बेस्ट थिंग इज सबका एग्जाम क्लियर होना चाहिए. श्योर गौतम, थैंक यू. क्वांटिटी वेरिएंस इज सिंपल ना. थैंक यू प्रीति, थैंक यू एवरीवन फॉर योर विशेस. आई विल डेफिनेटली कन्वे. क्वांटिटी वेरिएंस तो इट्स सिंपल. क्वांटिटी यू टेक इट स्टैंडर्ड क्वांटिटी 800, एक्चुअल क्वांटिटी टोटल हेयर, actual quantity total into standard price. 800 minus 800, if you talk about the quantity variance for A, it will be 800 minus 830 830 into 4, and there it will be 1200 minus 1190 into 3. That's it, quantity variance. Clear? Katiravan? Thank you Nitin, thank you. But after all the celebration now, the class is more important for me right now. Right now for me the class is more important. So the class will go on. पार्टी के लिए पूरी जिंदगी पड़ी है सर. But exams will not, the time is not going to stop for us. So right now, it's all, class is more important. Thank you everyone, definitely. Clear? Okay, so we are done with illustration number 4. Illustration number 5, sorry, illustration number 4 is done. Definitely we have to move ahead according to the time, right? Whenever the age was there, we also celebrated the birthdays, but now it's more important, the work is more important right now, right? Actually she told me to keep the class off on 19th, that we can just sit and celebrate, but yesterday I was physically, mentally I was not in the frame of mind to take the class. So I said ki 19th I will have to take the class now. I can't keep it off for 2 days. But we celebrated before the class. Simple celebrations. Okay, let's come to illustration number 5 now. With the labor variances, material variances we have done, right? But in the back questions we'll come again to the material variances. The standard and the actual figures for the firm are as under. The standard time for the job is 1000 hours. The standard rate per hour is ₹50. Actual time taken is 900 hours. Actual wages paid is 36,000. Calculate the variances. Again, we'll have to prepare the table. Standard hours for actual output, standard rate and standard cost. Actual hours, actual rate and actual cost. Right? Now here again the actual output is not given to you. The actual output is not given to you. So we will assume that whatever the information is given, that is given for the actual output. So standard time is 1000. Thank you AK. Standard hours is 1000, cost is, standard rate is 50 here. So the standard cost will be 50,000. Actual hours is 900, actual cost is 36,000, right? That is 40. Now you can calculate the labor variances. Will that be okay? This is a simple question like illustration number 1. This illustration number 5 is also simple. Raj, ICI module is getting covered here. Conceptual part is already covered on the YouTube. You can check the playlist section. Raj, playlist section check करो, वहाँ पे पूरे के पूरे concepts already available हैं. आप वहाँ से cover कर सकते हो, right? So no issues. This is only the ICI module that we are covering, and that too the live is free. After that it will convert into a paid course. Is that okay? Illustration number 5. We can move ahead to illustration number 6 now. Please let me know quickly. If we can move on to illustration number 6. Okay, let's move on to illustration number 6 now. The standard output of the product EXE is 25 units per hour in manufacturing department of a company employing 100 workers. The standard wage rate per labor hour is rupees 6. Okay. In a 42 hours a week, the department produced 1040 units of the EXE despite 5% of the time paid being lost due to the abnormal reason. The hourly wages actually paid were 6.26 and 5.70 respectively to 10, 30 and 60 of the workers. Clear? Now, calculate the relevant labor variances. Calculate the relevant labor variances. How will you calculate it, sir? See, the first thing is, what is the standard wage rate that is given to us? The standard wage rate that is given to us is 6 rupees. Now we need to calculate the standard hours for actual output. What is the actual output? 1040, right? 1040. Now this is what? This is the actual output that is there. The rate is given per hour, and he says 25 units in 1 hour is being manufactured in a department consisting of 100 workers. Now, how you can find out, sir? If you say, sir, 25 units are being manufactured in 1 hour, or let's take it in other ways. I won't explain it in this ways, then you will get confused. Sir, these 25 units are being manufactured by how many workers? 100 workers, sir. Isn't it? So that means 100 workers are working for 1 hour. Definitely, Vishal, definitely. More than safe position. More than safe. Students, our students have been scoring 80 plus easily from only and only the YouTube concepts also. Right? Definitely. Rest will depend upon how much you practice, how much you are able to understand, how much you practice ahead. It all depends upon you. Right? So, I can say it is equivalent to 100 hours, sir. If 100 workers are working for 1 hour, then they are manufacturing 25 units. So if I ask you one worker, sir, one worker would have taken 100 hours to manufacture 25 units. Isn't it? One worker would have taken 100 hours to manufacture 25 units. Then what is the hours per unit? What is the hours per unit? That is 100 divided by 25. That is 4 hours per unit. Right? This is the standard time. This is the standard time per unit. So what is the standard hours for actual output? Actual output is 1040 multiplied by 4, that is 4160 hours. This is the standard hours for actual output. Please tell me if this part is clear. Sir, 100 workers, yes, 4 hours per unit per labor. So for 1040 units, how many total hours will be required? That is 4160 hours will be required. Right? Now, so we can prepare the table now. Actually, the table is prepared, sir. The table is fine now. 4160 hours, standard rate is given, that is 6. Right? So amount you will get, that is the standard cost. What is the actual number of workers is 10, 30 and 60. Now workers have been paid, some workers paid at different rate, some workers paid at a different rate and different rate. So there are 3 categories of workers, right? What is the actual hours paid for? Actual hours paid for is these 10 workers worked for 42 hours in a week. So you have paid for this 10 multiplied by 42. You have paid for 420 hours multiplied by 42 here. Clear? And what is the idle time? Idle time is 5% of it. 5% of it is the idle time as it is given in the question. 5% of the time being lost due to abnormal reason. So what is the actual productive hours? That is 420 minus 21. That will give you the productive hours. Right? Minus this, you will get the production hours. And what is the rate? The rate is given 6.26 and 5.70. You will get the amount actually paid. You have paid for this many hours, right? This is the actual hours worked. Actual hours worked, and this is the actual hours paid. Both are going to be used. Right? So this is the table. This is your actual cost. This is your standard cost. This is your standard hours for actual output. This is your standard rate. Right? This is your actual hours paid. This is your actual hours worked. And this is what? This is your actual rate. This is the table. So the table formed here is good enough. That is why I have not written down the table. Table formed here is good enough. Is that clear? The table is clear. First, let me know that the table is clear. Then I have one more point to discuss on this. Clear? Good. Now, when you are calculating the variances here, I told you in the conceptual lectures also, when labor rate variance you are going to calculate, in case of labor rate variance, you have to take here the actual hours paid and not the worked one, right? That is, rate variance will be calculated according to the paid one, because rate variance is what? Whatever you have paid for, on those paid hours, what is the difference due to the rate, right? Thank you Abhishek for your thumbs up. Now, when you calculate the efficiency variance, efficiency is dependent upon the working of the employee, right? So here when this actual hour is which one? This is actual hours worked, right? So in case of efficiency variance, we can take anything. We can take paid also and we can take worked also. Here they have taken the efficiency dependent upon the hours being worked, right? Hours being worked. Clear? This is what they have calculated, because efficiency is dependent upon the working hours. But in this case, what will happen? Labor idle time variance, you can calculate idle hours into standard rate. If you are calculating this with the hours worked now, then this rate variance plus efficiency variance and cost variance, this total will not match, right? This total will not match, sir. Anyhow, it will not match. Clear? So this you have to be clear with. So this is what institute takes. Here we can take actual hours worked or we can take actual hours paid also. But if the actual idle time is there, actual hours worked is there, institute solve it by actual hours worked, right? So please be careful here. While calculating the rate variance, you have to take actual hours paid, and while calculating the efficiency variance, you have to take actual hours worked. This is what you have to give preference to. Is that point clear? So with this, we are done with illustration number 6. Illustration number 7 is on labor variances only. 7 and 8 is on labor variances. So let's continue. NPX Limited uses the standard costing system for manufacturing of its product X. The following is the budget data given in relation to the labor hours for manufacture of 1 unit of product X. So there is certain information that is given for the manufacture of 1 unit of product X, skilled, semi-skilled and unskilled. So 3 types of labor is there. Hours are given, rate is given 6, 4 and 3, right? In the month of January, total 10,000 units were produced. Following are the details. So 10,000 is what? It is the actual output. Then the actual data is given for skilled, semi-skilled and unskilled. Actual number of hours, rate is given and the amount is given, right? Next, it is given the actual idle hours during the month are this. The actual idle hours during the month are this total, right? So this is what? This is the hours that you have paid for. This is the hours paid for, right? And if from the hours paid for we subtract the idle hours, what we will get is the hours worked. The first thing is the table that they have prepared is pretty good. Institute, he says calculate the labor variances. So they have prepared a very good table. Forget about this column. No need of this column. The first, you will start with what? The standards for the actuals. The standard are for actual output. Actual what? Actual output, sir. Actual output. So the standards are given for 1 unit. These are the standard hours given for 1 unit. If you multiply it with the actual output, multiply it with 10,000, we will get the standard hours for actual output. Standard rate is given, so we will get standard cost. That is what is done. 20,000, 30,000 and 50,000, right? Standard hours for 1 unit multiplied by the actual output. Standard rate is given to you, so you will get standard amount, standard cost, right? Then the actual data is given. Now when you talk about this hours, this is hours paid for. This is hours paid for. You have actually paid for 18,000, 33,000 and 58,000 hours. The rate is given and the amount that you have paid is given. Then the next column that they have taken is idle hours. Idle hours, right? So actual hours minus idle hours. So hours worked, you will get it as 18,000 minus 500, right? 33,000 minus 700, right? And 58,000 minus 800. Clear? Thank you, AK. So this is the hours worked. Now you can calculate the variances. I have a question for all of you now. I have a question for all of you. Sir, in this question, we have three different types of labor that is given to you. Here if I want to calculate revised standard hours, how will I calculate revised standard hours? I have to distribute the actual hours in the standard proportion, but which actual hours I am going to take, whether I should be taking 1,09,000 or I should be taking 1,07,000. Which actual hours I should be taking, sir? 1,09,000 or 1,07,000, because there are two actual hours that I have, actual hours paid and actual hours worked. So what I should be taking for the revised standard hours? I want to know this. Please let me know. Let's see. Let's see, please answer, all those who are live, guys. Come on, quickly. What we should be taking for revised standard hours? 1,09,000 or 1,07,000? Actual hours worked, okay. 1,07,000 is actual hours worked. Actual hours worked. 1,07,000. Actual hours paid. Pritam says actual hours paid, but rest are saying 1,07,000. Sir, 1,07,000 is absolutely correct, right? We should be taking 1,07,000. Sir, what is the reason behind it? Pritam, listen to it very carefully. Why we are calculating the revised standard hours? We are calculating revised standard hours for labor mix variance and labor yield variance, right? Labor mix variance and labor yield variance. We are calculating the revised standard hours for that. Now this labor mix variance and labor yield variance, they are the sub variance of which variance? That is labor efficiency variance. And I told you yesterday only in one of the questions that when we are calculating the efficiency, in case of efficiency, what we take, the actual hours paid or actual hours worked, the efficiency we normally calculate on the basis of actual hours worked, right? So if you are calculating the efficiency on the basis of actual hours worked, and mix and yield variance are the sub variance of this labor efficiency, so they will also be calculated on the basis of actual hours worked, right? So they will also be calculated on the basis of actual hours worked. So you will distribute 1,07,000 in the standard proportion, that is in the proportion of 2:3:5, sir, right? Divided by 10 multiplied by 2, it will be 21,000. 21,400, right? Into 3, that is 32,100 and 53,500. So this will be your revised standard hours. Clear, Pritam? Next time be very careful, okay? So right now if you are committing the mistake, don't worry at all. It's 100% perfect, but in the examination, please be careful with these things, okay? Clear? Now you will be able to calculate all the labor variances. Please let me know if you have any doubts in this question. The table is absolutely correct, whatever the institute has prepared. The only thing is this budget column we do not require, sir. We actually do not require. We will just prepare standards for actual data, idle hours, hours worked and revised standard hours. That's it. The rest of the table is absolutely perfect, whatever this is given in the institute module. Any doubts in this question? Illustration number 7. Please let me know if you have any doubts in this. In standard costing, now I was expecting more people to join in, but in fact the people have reduced in standard costing. This is because this is one of the most important chapters, so I was expecting that some students might come for only standard costing, but actually they have reduced. Clear. Okay, very good. Let's move on to the next one. Illustration number 8. Again, mark it as important, sir. Illustration number 8 is important, and this illustration number 7 is also important, right? So please mark this as important. All the important illustrations you have to revise before the examination or during your revision time. Now, whenever you will be doing revision, please revise these topics at least, okay? Illustration number 8, the standard labor employment and the actual labor engaged in a week for a job are as under. So again, 3 categories of labor: skilled labor is there, semi-skilled is there, and unskilled labor is there. Standard number of workers in the gang is there, actual number of workers employed. Standard is what we planned for. We planned for that 32 skilled workers will be working, 12 semi-skilled and 6 unskilled workers will be working, right? So they will be working together on a particular project. But the actual number of workers used were 28, 18 and 4. Standard wage rate is given to you and the actual wage rate is given to you per hour. Then during the 40 hours working week, the gang produced 1800 standard labor hours of work. Calculate the labor variances. Now what is this 1800? Sir, this is the actual output. What they have done is they have given the actual output in terms of what? They have given the actual output in terms of the standard hours, that the actual output equivalent to 1800 standard labor hours, right? So this is the actual output. Sir, the first thing, standard hours for actual output, we need to calculate what is the standard hours for actual output for all the 3 different types of workers. How we will calculate it? Good evening, Joydev. How we will calculate, sir? First we will calculate what is the standard output. The first thing here will be calculation of standard output. What is the standard output? Standard output says that a skilled labor, so there are 3 labors: skilled labor, semi-skilled labor and unskilled labor, right? What are the standards? The standard output is that 32 workers will be working for 40 hours in a week, right? That is 32 multiplied by 40, that is 1280. Next is 12 and 6 workers. 12 and 6 workers into 40 into 40, right? That is 480 and 240. So total is 80 plus 480 plus 240. Sir, this is what? This is the standard output. This is your standard output, right? This is what should have been generated, should have been done, but the actual output is equivalent to 1800 hours, right? Total 1800 hours. The standard is 32 workers, that is what we planned for, that 32 workers will be working for 40 hours in a week, 12 for 40 hours in a week, 6 for 40 hours. So total standard output that they would have generated is 2000 hours. Actual output is 1800 hours. Now if I want to calculate standard hours for actual output for individual workers, what will be for skilled worker? Sir, for skilled worker we say that For standard output of 2000 hours, what are the standard hours? 1280. For actual output of 1800 hours, what will be the standard hours of the skilled worker? Multiplied by 1800. So 1280 divided by 2000 into 1800, that comes to 1152. Similarly, for semi-skilled worker, for a standard output of 2000 hours, what is the number of standard hours? That is 480. For actual output of 1800 hours, what will be the standard hours? This will give us what? The standard hours for actual output, 432. Similarly, for unskilled, for standard output of 2000 hours, 240 hours is the standard hours. For actual output of 1800 hours, then what will be the standard hours? So 240 divided by 2000 multiplied by 1800, that is 216, right? So the total here is plus 432, just let's verify, that is 1800 hours. This is how we will calculate the standard hours for actual output, right? Then the standard rate is given to you 3, 2 and 1. Standard rate is given to you 3, 2 and 1. What will be the actual hours? That will be 28 into 40. Let's see if the table is prepared or not. Okay, not a very good table formation, I would say. Let's prepare the table, sir. Let's prepare the table. Standard hours for actual output, standard rate, standard cost, actual hours, actual rate and actual cost, right? So 3 types of labor we have, that is skilled, semi-skilled and unskilled, right? So what is the standard hours for actual output? We have calculated, sir, 1152, 432 and 216. Standard rate is given to us. What is the standard rate here? 3, 2 and 1. 3, 2 and 1, right? So what is the standard cost? 1152 multiplied by 3, that is 3456. 432 multiplied by 2, that is 864 and 216. What is the actual number of hours? Actual number of hours will be 28 multiplied by 40. Actual workers into number of hours, that is 1120, right? For this will be 18 and 4. 18 multiplied by 40, that is 720 and 4 multiplied by 40, that is 160. What is the actual rate that is given to you? That is 4, 3 and 2. 4, 3 and 2, right? So what will be the actual cost? 1120 multiplied by 4, that is 4480. 720 multiplied by 3, that is 2160 and 160 multiplied by 2, that is 320. What is the total actual cost? 6960. What is the actual hours here? 1120 plus 720 plus 160, that is 2000 hours, right? What is the total standard cost here? 3456 plus 864 plus 216, that is 4536 and this is 1800. Now here you can easily calculate the revised standard hours also. How? Sir, this will be distributed in the standard ratio. This will be distributed in the standard ratio, sir. Right? That will be 1280. Right? 432 divided by 1800 into divided by 1800 multiplied by 2000, that will be 480 and 240. So this is the table for this particular question that we have prepared. Let me know if you have any doubts in this question. This question is about the actual output is not given in terms of units, but the actual output is given in terms of the number of hours that is being generated in total, right? Any doubts in this question? Illustration number 8. We are done with illustration number 8, sir. Clear? Great. Rest of the people, please let me know if you have any doubts. Only 3 people are saying clear. Rest of the people, please let me know if you have any doubts in this illustration. So we are done with illustration number 8, and with this we are done with all the labor variances. Now we will move on to the variable overhead variances. Illustration number 9. Here everybody. Okay, let's move to illustration number 9 now. Let's move to illustration number 9. This is on variable overhead variance. From the following information of G Limited, calculate the variable overhead cost variance, expenditure variance, and the overhead efficiency variance. Now, when we talk about the overheads, whether it is the variable overhead or whether it is the fixed overhead, right? In terms of standard costing, these overheads can be absorbed either on the basis of material quantity or on the basis of labor hours. 99% of the times, these are absorbed on the basis of labor hours, right? So this variable overhead is almost similar to the labor variances. Let's see what is there. The budgeted production is there 6,000 units. Budgeted variable overheads are given 1,20,000. Standard time for 1 unit of output is 2 hours. Actual production is 5,900 units. Actual overheads incurred is 1,22,000. Actual hours worked is 11,600. So again, the hours worked is given. The absorption we are going to do it on the basis of hours. Okay, so we are going to prepare the table. In case of variable overhead variances, there will be no mix and yield variance, right? So this is one of the simplest variance. So we'll prepare the table, that is standard hours for actual output, standard rate, standard cost, actual hours, actual rate, and actual cost. See, whatever the information is given, let's try to understand that. He says in the making of 1 unit, 2 hours are the standard time, and what is the actual output? 5,900 units. So for 5,900 units, what will be there, sir? 5,900 multiplied by 2. That will give you what? 11,800 is the standard hours for the actual output. Okay, sir. The actual hours are given 11,600 and the cost is given. And the cost is 1,22,000. 1,22,000. Actual rate we can calculate, divided by 11,600, that is 10.52, rounded off to 2 digits. Now, what is the standard rate, sir? What is the standard rate? Here the calculation of standard rate is important in this particular question, that how to calculate the standard rate here, sir. See, standard rate, it is given here. From this information we can calculate, but we can calculate the standard rate not per hour. We need the standard rate per hour, but here we are calculating standard rate per unit. 1,20,000 divided by 6,000 units, that is 20 rupees per unit. Now, how can I calculate the rate per hour? The rate per hour. See, he says in the making of 1 unit, 2 hours are required. In the making of 1 unit, 2 hours are required. So this rate is for how many hours? This rate is for 2 hours. If I want to calculate the rate for 1 hour, what will I do, sir? 20 divided by 2, that is rupees 10 per hour. Right? This calculation is important here. The standard rate per unit is being calculated first. Then we say in the making of 1 unit, 2 hours are required. That means this rate is for 2 hours, na? Because this is for 1 unit, and for 1 unit 2 hours are required. So this 20 rupees is 2 hours, for 2 hours. What I need is, I need the rate per hour. Rate for 1 hour, that will be 10 rupees per hour. Right? So standard rate here is 10 rupees per hour, that is 1,18,000. Clear? So you can easily calculate now the variable overhead variances, right? One thing here, please be careful about while calculating the variable overhead expenditure variance or the rate variance. One is the cost variance, one is the efficiency variance dependent upon the hours. Variable overhead expenditure variance. Please be careful with one thing here. Variable overhead expenditure variance. What will be that, sir? That will be standard rate minus actual rate into actual hours. Right? Now, if you take here 10 minus 10.52 into 11,600, your answer will vary a little bit. Why? Because of this rounding off. Right? In case you have an actual rate in the rounding off, that means this is 10.5172413793. This is something like that. If you are getting an actual rate like this and you are calculating the expenditure variance, or you are calculating the labor rate variance, or you are calculating the material price variance, in that case, do not solve it like this. Right? Then how to solve it to get the accurate answer? Here the answer might not be wrong, but still, why to take the risk, sir? There will be a variation of answer. Then what is the correct way? The correct way is multiplied with this and this. We'll write it as standard rate into actual hours minus actual rate into actual hours. Right? What is this actual rate into actual hours? Actual rate into actual hours is equal to actual cost. Right? So I can write it as standard rate into actual hours minus actual cost. Right? So what is the standard rate here? 10. Actual hours here 11,600 minus actual cost. I can directly take it as 1,22,000. That's it. 1,16,000 minus 1,22,000. Then you will get absolutely accurate answer. You will get absolutely accurate answer, sir. Clear? Please let me know if you have any doubt. These small points are important from examination point of view. That is the main purpose, sir. Solutions though are given in the institute module. You people can do it on your own also. But these small points, what are important, relevant from the examination point of view, this is what you need to understand, and this is what you need to gather from these lectures. This is important. That is the purpose of this particular series. Right? Absolutely clear? Any doubts in this? Any doubts in this particular question? Done? Done. Great. So two important points in this question. One is the calculation of standard rate per hour. Second is that this point, calculation of expenditure variance, how to deal with it to get accurate answer, right? We do not want question number 8. Why you take the standard? Joydeep, क्या लिखा है? Okay, so with this we are done with the variable overhead variances also, right? Let's move on to the fixed overhead variances. Question number 8, standard R is not 1800, na? It is given the actual output, it is given, it is written, sir. See, produced means actually produced, that out of the standard 2000 hours, they have actually produced 1800 hours of work, right? Correct. Joydev, it is given the gang produced 1800 standard labor hours of work. That means the standard labor hours of work was 2000 hours. Out of that 2000 hours, they have actually produced 1800 hours of work. This is the meaning of this line, right? Clear? Joydev, please let me know. Yes, Hari, correct. Slight variation due to the rounding off will be there in case you do not expand it. But it's always better to expand it and solve it like this to get 100% accurate answer. And because, see, we do not want to give institute any chance to deduct the marks. That's it. That's the purpose, right? We do not want to give them the chance to deduct our marks. Okay. Got it now? Chalo. Let's come to illustration number 10 now. This is the fixed overhead variances. This is on fixed overhead variances. Might be the last illustration. I want to keep this class short today, right? I have to go somewhere, so I'll be keeping it little short. Illustration number 10 on the fixed overhead variances. The cost details of J&G Limited for the month of September is as follows. Budgeted is given and the actuals are given. Fixed overheads amount is given, units of production is given, that standard number of units, standard output is given and the actual output is given. This is what? This is your standard output and this is your actual output, right? Standard time for 1 unit is 2 hours, actual hours worked is 16,000 hours. Calculate all the fixed overhead variances. Let's prepare the table. Very simple table, sir. In case of fixed overhead variances, how we will prepare the table, sir? Standard hours for actual output, standard rate, standard cost, right? Actual hours, actual rate, actual cost. Then 3 more columns will be there. In this case, we take the budgeted hours, budgeted rate and budgeted cost. Now this represents what? This represents all the data for standard output, right? For a standard output. Clear? The first thing that you have to do is always, in most of the cases, start with the budgeted data. Start with what? Start with the budgeted data. So what is there for the budgeted data? We'll focus here. We will focus here. What information is there? Budgeted cost is there or the budgeted overheads is there? 15 lakhs. So I can write here, easily write here 15 lakh rupees, right? What is the budgeted hours or the budgeted rate? Budgeted hours we can write down. For the budgeted output or the standard output, what is the standard output? 7500. What is the rate? What is the time for 1 unit? 2 hours. So I can calculate the budgeted hours as 7500 multiplied by 2, that is 15,000 budgeted hours. This whole budgeted column now, budgeted hours, budgeted rate and budgeted cost, this is for what? This is for the standard output of 7500 units. In this case it is 7500 units, right? So this is for 7500 units. What is the budgeted rate now? We can calculate, sir. 15 lakh divided by 15,000, that is 100 rupees. This is my standard rate. Now the next thing that I will do is I will put this standard rate here now. Standard, not in the standard cost, not in the standard cost, but the standard rate here, 100. Correct. Budgeted rate is equal to standard rate. Now what is the standard hours for actual output? Sir, what is the actual output here? 7800 units. And for 1 unit, what is the standard hours? 2 hours. So what is the standard hours for actual output? That is 7800 multiplied by 2. 7800 multiplied by 2, that is 15,600. So what will be the standard cost? That is 15 lakh 60,000. Actual hours given to you, that is 16,000 hours. Actual cost. Himanshu, you can show in the main answer also. No issues in that. Anyways, it is going to be correct. Even if you will show in the main answer, that will be correct. If you show as a working note, even that will be correct. So the actual cost here is 15 lakh 60,000 is the actual cost. Yes, sir. So this is the complete table for the fixed overhead variances, sir. Actual rate is 97.5. Even if you will not write actual rate, even then it will be correct, because we do not need actual rate. We do not need actual rate. Any doubts in this question, sir? What are the variances which are asked? Fixed overhead cost variance. What will be the fixed overhead cost variance, sir? Standard cost minus actual cost. So there is no variance. Fixed overhead cost variance is 0, right? Because the standard cost here is equivalent to the actual cost. Now I have a question for you. Before we close this, I have a question for all of you. Sir, what do we call the standard cost? What is the meaning of this standard cost? I want to know. Right? Okay. So solve this. The table I have prepared. Solve this. This is your homework now. Please tell me, what do we call the standard cost? Standard cost for actual output. There is another name for this. What is that? I want to know. What is the other name for this? Anybody? Joydev, correct. This is also known as my absorbed cost. Absorbed cost, right? Because we are taking here the actual hours, right? Standard hours for actual output into standard rate. This is my absorbed cost. 100% correct. Well done. Well done, Joydev. Well done. Illustration number 11. A company has a normal capacity of 120 machines working 8 hours per day of 25 days in a month. This is normally what they do. This is the standard that they follow. The fixed overheads are budgeted at 1,44,000 per month. This is the budgeted overheads which are given. The standard time required to manufacture 1 unit of the product is 4 hours. In April 2021, the company worked for 24 days and 840 machine hours per day and produced 5305 units of the output. The actual fixed overheads were 1,42,000. So it is about the fixed overhead variances. So we'll be making standard hours for actual output, standard rate, standard cost, actual hours, actual rate and actual cost, budgeted hours, budgeted rate and budgeted cost. So what is given to us? First of all, the budgeted overheads are given to us, that is 1,44,000. 1,44,000 is the budgeted cost. What about the budgeted hours? For the budgeted hours, he says 120 machines, they run for 8 hours per day and 25 days in a month. So we are talking about the monthly thing, right? So it will be 120 into 8 into 25. So this will be 120 multiplied by 8 multiplied by 25. This is the normal that they do. This is the standard. That is 24,000 is the budgeted hours. So what will be the budgeted rate here? That is 6 rupees. So this budgeted rate I'll take up in the standard rate. Now what is the standard hours for actual output? He says 4 hours for 1 unit and the actual output is 5305 units, right? So it is 5305 multiplied by 4. 5305 multiplied by 4, that is 21,220. This is the standard hours for actual output. Multiplied by 6, standard cost is 1,27,320. Actual hours are 840 machine hours per day multiplied by 24 days. So 840 into 24. Actual hours will be 840 multiplied by 24. That is 20,160, and the actual cost is given 1,42,000. That's it, right? 1,42,000 divided by 20,160, that is 7.044. That's it. That's the fixed overhead table. Any doubts? Now you will be able to continue all. You can calculate all the variances normally, right? नहीं, फर्स्ट ग्रुप के रिजल्ट के बाद स्टूडेंट्स ज़्यादा आ रहे थे बट अब कम हुए हैं पिछले दिनों में. Okay, anyhow, any doubts in this illustration? Khushi, all the only 4 chapters are left: standard, marginal, budgetary and service. Rest is all completed. Standard we are doing, after that marginal, budgetary and service is left, rest everything is done. Clear? Okay, so let's move on to the next one. As per your comfort issue. जैसे ठीक है वैसे करो formulas याद. चलो. Let's move on to illustration number 12 now. The overhead expense budget for a factory producing to a capacity of 200 units per month is as follows. Description of the overhead is given: power and fuel, repair and maintenance, printing and stationery and other overhead. Fixed cost per unit is given in rupees and variable cost per unit is given to you, total cost per unit. The factory capacity is 200 units, but actually what they have produced is only 100 units in a particular month. The details of the overheads actually incurred have been provided by the accounts department and are as follows. Power and fuel, actual cost is given. Repair, maintenance, printing and stationery and other overhead, the actual cost is given. What is the total cost here? 4 lakh plus 2 lakh plus 1 lakh 75,000 plus 3 lakh 75,000. The total actual overheads incurred is 11 lakh 50,000. You are required to calculate the overhead volume variance and the overhead expense variance, right? So what is a volume variance? Volume variance basically is absorbed cost minus budgeted cost, right? This is the this is what is known as volume variance, or we can also write it as what is absorbed cost? We can write it as standard hours for actual output minus budgeted hours into standard rate. One and the same thing, but the problem here is the hours and everything is not given. Hours is not given, so we cannot do it by this. We cannot prepare the table in this case, right? The table because the information is not fully available. What will be the absorbed cost in this case? For volume variance, what will be the absorption of the cost? Sir, the absorption we do on the basis of what? We are talking about the fixed overheads, right? Here when he is calculating about the overhead volume, he is talking about only and only the fixed overheads, right? Because in case of variable overheads, we do not have the volume variance. Now, what is going to be the absorbed cost? Absorbed cost is what? The actual number of units, that is 100 units, multiplied by the standard rate. Standard rate is 3000. Right, that will be the absorbed cost. See here, volume variance, absorbed minus the budgeted. Absorbed is 100 units multiplied by 3000. Budgeted is what you have planned for. Planned for is 200 units multiplied by 3000 cost. Right, the difference between the two will be your volume variance, that what is the difference due to, or the variance due to the difference in the volume of the production, right? So volume here is 200 and 100 units. What is the difference due to that, right? The next one is absorbed minus the budgeted. Next is expense variance. Expense is what you originally planned for, that is the budgeted overheads minus the actual overhead. Budgeted is you planned for 200 units into 3000. Now, what is the actual overheads? Can we take 11 lakh 50,000 as the actual overheads? No, sir, because in this 11 lakh 50,000 there is the variable cost also. In this 11 lakh 50,000 there is what? There are two components. One is the fixed cost, another one is the variable cost. For the fixed overhead expense variance, we need the fixed part. Then from this 11 lakh 50,000 we will have to subtract the variable cost. What will be the variable cost? On 100 units at the rate of 1500, this part, this 1500, right? So that will be 1 lakh 50,000. So what will be the fixed cost here? 11 lakh 50,000 minus 1 lakh 50,000, that is 10 lakh rupees. That is 10 lakh is the fixed cost here. See, right? 6 lakh minus 10 lakh, 4 lakh adverse. This is the expense variance. Now, this kind of question we cannot prepare table, right? It is not feasible. It is not practically possible to prepare the table in these kind of questions. Any doubts in illustration number 12? Any doubts in this illustration? 12th one. Clear? Everybody? Please let me know if there is any issue in illustration number 12. Okay, let's move on to the next one. Let's move on to the next one. Illustration number 13. 13th. Mark it as important. The following information was obtained from the records of a manufacturing unit using the standard costing system. So standards are given, the actuals are given, production is given, working days are given, machine hours. Yes. Machine hours are given and the fixed overhead and the variable overhead. Machine hours or labor hours, it is one and the same thing. The treatment will be equivalent, sir. Fixed overheads are given, standard cost and the actual cost. Variable overheads are given. You are required to calculate the overhead variance, variable overhead variances and fixed overhead variances. So that means we will be preparing two tables here. The first table will be for variable overhead variances. Variable overhead variance. So the table will be the standard hours for actual output, right? Then standard rate, standard cost, actual hours, actual rate and actual cost. Now what is the actual output here? First of all, we say standard hours for actual output. Actual output is 3800 units. So what is the standard hours for 3800 units? It is given that for 4000 units, the standard hours for 4000 units, the standard hours are how much? 8000. So what will be the standard hours for 3800 units? That is 8000 divided by 4000 multiplied by 3800. 8000 divided by 4000 multiplied by 3800, that is 7600 is the standard hours for actual output. What is the standard rate? Standard rate, how will you calculate the standard rate per hour? That is 1,20,000 is the standard variable overheads for how many hours? For 8000 hours. I needed what? I needed for hours. So the standard rate will be divided by 8000, it will be 15 rupees. Standard rate will be 15 rupees, that is 1,20,000. That is the standard variable overheads divided by the standard hours, 8000. So what will be the cost now? 7600 multiplied by 15, that is 1,14,000. Next, what is the actual number of hours that is given to you? 7800. And the actual cost is also given, that is 1,20,000. Actual cost is given 1,20,000. 15.85. Clear? So this is the table for variable overheads that is there. The next table will be for the fixed overhead variances. Will be for the fixed overhead variances. Standard hours for actual output, standard rate, standard cost, actual hours, actual rate, actual cost. Then we have the budgeted hours, budgeted rate and budgeted cost. So we'll start with the budgeted. What is the budgeted hours that is given? 8000 hours. What is the budgeted cost that is given? When we talk about cost, we are talking about this fixed overhead variances. Now we are not talking about the variable one. We are talking about the fixed variances. 4 lakh here. So here it is 4 lakh. Right. So what is the budgeted rate here? That is 50 rupees. This budgeted rate will be standard rate, that is 50 rupees. Standard hours for actual output, it will be this one only, 7600. It is going to be same. That is for 4000 hours, it is the 8000 for 4000 units, 8000 hours. So for 3800, that is actual output, how many hours? 7600 hours. What is the standard cost? 7600 multiplied by 50, that is 3,80,000. Actual number of hours are given, that is 7800 hours, and 3,90,000 is the actual cost. actual cost is given as 3,90,000. That's it. So that comes to 50 rupees. That's the table for fixed overhead variances. Any doubts on this question? Now you can calculate all the variances. Any variance you can calculate for variable overheads also. And in this particular question, because the fixed overhead variances, the number of days are given. Because this number of days are given, here you can calculate calendar variance also. Because without days you cannot calculate calendar variance, but here you can calculate calendar variance. But there is one mistake that they have committed. Sir, here they have calculated it as revised, this is revised capacity variance. It is not a capacity variance, it is the revised capacity variance that they have calculated. Right, rest of the things are same. So any doubts in this thing? The table is clear. With this table you can calculate any variance, variable overhead also and fixed overhead also. And in case of fixed overhead, because the number of days are also available, 20 and 21 days, so you can calculate possible hours, you can calculate calendar variances also. Any doubts in this one? Clear? All clear? Great. Okay, so with this the illustrations part is over for us. The illustrations are done. There are no more illustrations that are there. Let's come to the back questions quickly. A few back questions we'll quickly discuss. Let's come to practical question number 1. For making 10 kg of Semco, the standard material required is for a 8 kg and 4 kg rate is given to you. During the April, 1000 kg of Semco were produced. The actual consumption of material is given. Calculate the material variances. So it's very simple. That is the standard quantity for actual output, right? Then standard price, standard cost, actual quantity, actual price and actual cost. Right? What is the standard quantity for actual output? So there are two products. One is A, another product is B. For A, he says for 8 kg is required for 10 kg. So what will be required for 1000 kg? That will be 8 divided by 10 multiplied by 1000. That is 800 kg will be the standard quantity here. 800 kg. How, sir? 8 divided by 10 multiplied by 1000. For B, it is going to be 4 divided by 10 multiplied by 1000. That is 400 kg. Right? That is 4 divided by 10 multiplied by 1000. The standard price is given, that is 6 and 4. 6 and 4. Right? So that will be 4800 and 1600. What is the actual quantity? 750 and 500. That is given to you. 750 and 500. Actual price is also given, that is 7 and 5. 5250 and 2500. That's it. So that's the total table for you. 6400 0 plus 2500, that is 7750. That's it. Clear? So this was a very simple question, straightforward question, nothing special in this particular question to be discussed. Nothing special in this question. Is that clear? Quickly let me know. You can calculate. You can calculate mix and yield variance. Divide this 1250 in the ratio of 8:4. Simple. Or 2:1. You can divide this. You can calculate revised standard quantity also. That is 1250 in the ratio of 2:1. Here it will come to 833.33, or just round it off, 833. The rest 1250 minus 833, it will be 417. So this is the revised standard quantity that you can calculate. Anywhere where you have more than one raw material, you can calculate revised standard quantity. Okay, let's come to question number 2 now. Yes, extra column is required. Obviously, extra column only you will make. Okay, next one, second question. The standard mix to produce 1 unit of the product is as follows. In the making of 1 unit, material X 60 units at 15 per unit, material Y 80 units at rupees 20 per unit, and material Z 100 units at rupees 25 per unit. Right? During the month of April, 10 units were produced and the consumption was as follows. So the actual data consumed is given to you. Calculate all the material variances. Will you be able to do it? Standard quantity for actual output, that will be 600, 800 and 1000. Standard rate is given, standard cost you can calculate. Actual quantities are given, actual rate is given. So that is a very simple straightforward question. Material variances, you can calculate all the material variances including the yield and the mix variance. Yes, verification is possible. Verification is very much possible in this case. Definitely. Definitely the verification is possible. So this question number 2 you will be able to attempt. Okay, let's come to question number 3. Let's come to question number 3. Now this is a good one. Question number 3, mark it as very important. Gap Limited operates a system of standard costing in respect of one of its products which is manufactured within a single cost center. The following are the details. Budgeted data is given 60, 40, 100 input, normal loss, net output is 80, price is given, amount is given. The actual output is also 80 units. So actual output is equal to standard output. That means this proportion is for actual output only, because in this case the actual output is equal to your standard output. So 60 and 40 that they are taking, that is for actual output, standard output, one and the same thing, right? Then the actual in the actual data, some of the data is not given to you. For material A, the price is not given. For material B, the quantity is not given, but they have given material price variance and the material cost variance. So let's prepare the table and then try to identify what we can do. That is the standard, there are two raw materials now. Okay. Standard quantity for actual output, standard price, standard cost. Actual quantity, actual price and actual cost, right? Then we have the revised standard quantity. What is the standard quantity for actual output? That is 60 and 40. 60 and 40 for A and B. Standard price is there 20 and 30. 30, 1200 and 1200. Now actual is given, 70 is given and 30 is the price that is given. 70 is given here and 30 is the price that is given here. No other information is available. No other information is available. Now he says he has given two variances. One is the material cost variance, that is given as 105 adverse, that is minus 105, and the material price variance, that is given as minus 275. Wait. Material cost variance is equal to minus 105 and material price variance is equal to minus 275, right? This is what is given to us. Now if I want to start with the cost variance, what is there in case of a cost variance? How do we calculate material cost variance? Material cost variance is standard cost minus actual cost. It is given minus 105, standard cost is given 2400 and the actual cost we have to calculate. So actual cost will be 2400 plus 105, right? That is 2505, correct? Okay sir, so actual cost will be 2505. Right now, but sir, this will not serve our purpose. From here we will not be able to calculate this price, we will not be able to calculate this quantity. Nothing we will be able to do, sir. Nothing we will be able to do. We have calculated the total actual cost, that's fine, but we are not able to find out the actual cost for per product, for A, for B. We are not able to find out that. So let's try to make the use of another variance that is given, that is price variance. What is price variance? Material price variance, that is standard price minus actual price multiplied by actual quantity, right? Now here one thing you have to see, if you see the price of B, here, sir, the price of B is same, that is the actual price is equal to, what is wrong? What is wrong, Gopinath? Please let me know. Yes, standard price minus actual price into actual quantity. वही किया है. 18.64, Preeti, what is that? Now, if you see the product B, in case of product B, there is no price variance. There will be no variance because of the price, because the standard price is equal to your actual price. The standard price is equal to your actual price. So the price variance will only be in case of product A, right? So let's say I am saying the product, for product A, the actual price is X. So what I can take here, price variance is minus 275. Standard price is there for A, it is 20, minus X into actual quantity is given, actual quantity is 70. Right? So minus 275 divided by 70 is equal to 20 minus X. That comes to 3.93 equal to 20 minus X. So I'll take X on the other side. X is equal to 20 plus 3 point. Acha, the figures I have changed. Okay. Thank you. Got it. Price variance is 105. Okay. Okay. That is the reading mistake. So you're saying, okay, no issues. We will correct it. Thank you for the correction. So here it is 275, right? This is minus 275 and this is minus 105. Correct, na? Okay. Methodology was correct, but calculation problem, right? So this is 2675. 2675. Got it. So MPV here is minus 105, right? 105 divided by 70 is equal to 20 minus X. So this will be something else. 105 divided by 70, that is 1.5, right? So X is equal to 20 plus 1.5, that is 21.5. Now correct, na? Now correct. So that means this price is what? This price we have calculated as 21.5. Right? What is the actual cost now? What is the actual cost? 70 multiplied by 21.5, that is 1505, sorry. 1505. Right? What is the total actual cost for B now? 2675 minus 1505, that comes to 1170. Now cost divided by price, we will get the quantity, divided by 30, we will get the quantity as 39. Right? So 39 plus 70, that is 109. And revised standard quantity you can calculate, sir. You can distribute 109 in the ratio of 6:4. Here it is 100. Now correct. So here 109, here you have 65. 9 minus 65, that is 44. Now correct, sir. Any doubts in this? Is this question clear? Hmm. 658.65 and 44, what is, right, 65 and 44 is the revised standard quantity, correct. Clear? So this is an important question. Whenever there is a question on the missing figures, it always becomes important. It is always important. That's why I have marked this question as very important, right? So we are done with question number 3. Mark it as very important and please revise this question before the examination or during your revision part. These type of questions have often been asked, right? Come to question number 4 now. Yes. In the examination, you can round off the figures. No issues in that. You can definitely round off the figures. No issues. Okay, let's move on to question number 4. Another very important question. 1 kilogram of product K requires 2 chemicals A and B. The following were the details of the product K for the month of June 2023. Right, 65.4 and 43.6, that is absolutely correct. That is absolutely correct, Priti. 101% correct. No issues in that. Let's come to question number 4. Right? Now the standard mix for chemical A is 50% and chemical B is 50%. Yeah, that's one thing that you have to do. That's what the table we are preparing. Rest of the answers you can just practice and cross verify it. Okay. Standard price kilogram of the chemical A is rupees 12 and chemical B is rupees 15. The actual input of chemical B is 70 kg. The actual price of chemical A is 15. Standard normal loss is 10% of the total input. Total material cost variance is 650 adverse and material yield variance is 135 adverse. Let's prepare the table. Right, let's prepare the table. Whatever the table we can make, let's try to prepare it. There are two now for A and B, because until and unless we prepare the table, we will not get to know what is the information that is given and what is the information that is not given. We will not be able to identify that. Actual quantity, actual price, actual cost and revised standard quantity will be there. Now, what is the standard quantity for actual output? See, the actual output is not given to you. Yeah, that's fine. Some difference will be there. Rounding of difference will be there. Yeah, that's fine. It's completely okay. Right? Now, what is all the information? He says, whatever is the standard, we mix it in the ratio of 50:50. So, what we assume is, let's say the standard input is 100 kg. That is going to be our assumption. Let standard input be 100 kg. So what will be the standard quantity of standard quantity? That will be 50:50 for A and B. That will be 50 and 50. Sir, why we have taken 100 kg? Because the actual input of chemical B is given 70 kg, right? So we cannot take 500, 600, 700. No, like that we will not be able to take it. But we will have to assume something. So we are assuming it is 100 kg so that it is near to 70 kg itself. Realistic, right? Standard price is given, that is 12 and 15. 12 and 15. So 15 to 12, that is 600 and this will be 750, sir. Total 100 kg. He says there is a normal loss also. Normal loss is what? 10%, that is 10. So 90 is what? 90 is your actual output. This is what? The actual output. Right? This is your actual output. Now, what is the actual quantity? Actual quantity is given for chemical B only, that is 70 kg. 70 kg is given here, right? I'll write 70 only now. Let's write 70 only. And it is given the actual price of A is given 15. Rest of the information is not given. So we need to calculate this and we need to calculate this. Only then the rest of the question will be able to solve it. What else is given now? It is given the material cost variance is equal to how much? Material cost variance is minus 650 and material yield variance is given as minus 135. Minus 135. Right? Now, let's see what we can do with the cost variance. First here, we will write here 1350. Right? This is the standard cost. 1350. Now, what is material cost variance? That is standard cost minus actual cost minus 650 is equal to 1350 minus actual cost. So, from here, actual cost will be 1350 plus 650. Right, 1350 plus 650, that is 2000. So total actual cost is 2000. total actual cost here is, this total is 2000, but it will not serve the purpose. 90 kg is the actual output, because it is given in the question that whatever you input, 10% will be the loss and rest of will be your actual output, right? So that is what is there. 90 kg is the actual output. For the actual output, because this is what we are going now, standard quantity for actual output. If the actual output is 90, right, the 90 is the actual output. For that, the standard will be 100 kg divided in 50 is to 50. So 90 is the actual output. Clear? Next, let's see what we can do with the yield variance, sir. What we can do with the yield variance. So material yield variance, that is equal to what? That is equal to standard quantity for actual output minus revised standard quantity into standard rate, right? Sir, revised standard quantity, how we are going to calculate the revised standard quantity, sir? We can. How? Let's see here, actual quantity is 70 plus x, right? So that means the total revised standard quantity will be 70 plus x distributed as 0.50 into 70 plus x and 0.50, 50%. 70 plus x is the total actual quantity distributed in which ratio? In the ratio of the standards, 50% and 50%, right? Clear? Now, what we will do, sir? Now, what we will do here? Sir, this yield variance is given overall. Overall yield variance is given as how much? Minus 135. Minus 135. What is the standard quantity for actual output? Total 100 kg. I can write it 100 kg. Sir, I cannot take it product wise separately. The reason being, material yield variance is given in total, so I will have to take the total value only, right? What is the revised standard quantity in total? That is 70 plus x. That is 70 plus x. Now the problem is, what will be the standard rate? Standard price basically. There are two different prices which are available. So what will be the standard price? In this case, we will calculate the average price. We will calculate the average price, that is 12 plus 15 by 2, that is 13.5, right? So we'll take here 13.5. Right? We cannot take it product wise, that will be difficult because yield variance is given in total, right? Yield variance is not given that for product A what is adverse or favorable, for product B they have given you the net value minus 135. So that means the standard quantity will also be required in total, revised standard quantity will also be required in total, and the standard price. Now there are two different standard prices, so what we are going to take is, we are going to take the simple average price. Now this calculation, from this calculation what we'll do is minus 135 is equal to 100 minus 70 minus x into 13.5. I'll divide it by here, minus 135 divided by 13.5 is equal to 30 minus x, right? So that will be minus 10 is equal to 30 minus x, x is equal to 30 plus 10 equal to 40, right? So from here we will get the value of x. X is what? The x is the actual quantity, that is 40 here. Now we can do, sir, 40 multiplied by 15, that is 600 is the actual cost for product A. 2000 minus 600, 1400 will be the actual cost for product B. So what will be the price? The price will be 1400 divided by 70, that is 20 rupees will be the price for this. Now everything is calculated, sir. Now you can calculate all the variances. You can calculate the revised standard variance also. You have got it here. 70 plus 40, 110. So 110 divided in the equal ratio, that is 55 and 55. Total 110. Any doubts in this question? Any doubts in this question number 4? Mark it as a very, very, very important question. Extremely important question from examination point of view. If they want to ask something tough, something good from standard costing, they will ask you these missing figures question. Definitely they are going to ask these missing figures. Clear? Okay, so we are done with this question number 4 also, right? Now, question number 7, I'll give you as homework. Come to question number 7, sir. Question number 7 is similar to illustration number 12 that we have done, sir. It is similar to illustration number 12. XYZ company has established the following standards for the factory overhead. Variable overhead per unit is 10. Fixed overheads are given 1 lakh rupees per month. Capacity is 20,000 units. Actually 3 lakh overheads, 15,000 actual output. Right? Production volume variance. What is volume variance? Absorbed overheads minus the budgeted overheads. Right? So what is the absorbed overheads? So fixed overhead rate per unit you will have to calculate. Fixed overhead rate per unit, standard rate, that is 1 lakh divided by 20,000 units, that will be 5 rupees. So what will be the absorbed overhead? That is 5 rupees multiplied by the actual output of 15,000 minus the budgeted overheads are there, that is 1 lakh. Right? This will be the volume variance. What will be the expense variance? Expense will be the budgeted minus the actual. Expense will be budgeted minus actual. Budgeted minus actual. But again the problem is the actual overheads. When he is talking about actual overheads, he is talking about the total overheads. In this the fixed overheads will also be there and variable will be there. How much of the variable will be there, sir? 15,000 multiplied by 10 rupees is the variable cost per unit. So 1,50,000 is variable. So what is the fixed part? That is 3 lakh minus 1,50,000. 1,50,000 is the fixed part here. Right? So budgeted will be 1 lakh minus actual will be 1,50,000. That is 50,000. Clear? So this is similar to illustration number 12. We are done with illustration number 7 also. Yes, in such type of questions we cannot prepare the table because the information is not sufficient to prepare the tables. Right? We need sufficient information to prepare the table, but in these type of questions the information is not there. Correct. Right? So we are done with question number 4 and then question number 7 we are done with. Let's come to question number 5 now. Let's come to question number 5. The following standards have been set to manufacture a product. Direct material is given 2 units of A at 4 per unit, 3 units of B at 3 per unit, and 15 units of C at 1 per unit. Direct labor hours is 3 hours at the rate of rupees 8 per hour. So total standard cost is given. The company manufactured and sold 6,000 units of the product during the year. Direct material cost were as follows. So this is the actuals that is given to you. Right, the company worked for 17,500 direct labor hours during the year. For 2,500 of these hours, the company paid at 12 per hour, while for the remaining, the wages are paid at the standard rate. Calculate the material price and usage variance and labor rate and efficiency variance. So we can prepare the tables easily, right? So will you be able to prepare the table? Material variance is there for 6,000 units. Multiplied by 2, 3 and 15, you will get what? The standard quantity for actual output. You will get the standard quantity for actual output. The actual output is 6,000 units. This is the actual output. Multiplied by 2, 3 and 15, you will get the standard quantity for actual output. Multiplied by standard price, you will get standard cost for actual output. Right? Actuals are given to you, so no issues in that. Actuals are given to you, so no issues in that. Similarly, in case of labor, 6,000 multiplied by 3 hours, that will give you the standard hours for actual output, multiplied by standard rate will give you the standard cost. Actuals are given, but when you are taking the actuals, there you have to be careful about one thing. When you will take actual hours, right, you will split it into 2 parts, right? You will split it into 2 parts, that is 15,000 hours. They are being paid at the standard wage rate, that is 8 rupees, and the remaining 2,500 hours are being paid at 12 rupees. Rest everything will be equal. Now when you will calculate this rate variance, this 8 rupees will not be a variance. The variance will only be for 12 rupees and 25 hours. That's the only thing that you have to be careful about. Rest, will you be able to do it? Should I give this as homework? Question number 5. Otherwise, a simple question. Otherwise, a simple question, sir. Okay, question number 6 also I am giving you as homework. Just try it once. If you are not able to do it, we'll take up tomorrow. Right? Question number 6, I want you people to read and try. This is also not a very difficult question. Right? I want you people to try it once. If you are not able to do it, we'll take up tomorrow. Right? So any doubts in today's session now? That's it for today. Obviously, the question can be twisted with any figures. That's it. Definitely. Any doubts in today's session? Clear? No doubts? Anything you want to ask? No doubts? Okay, so we can close the session. Thank you, AK. Good night. Okay, so we shall be closing the session now, right? If there are no doubts, please try question number 5 and 6, that is your homework. If there are any doubts, if you are not able to solve it, question number 6 is again a very good question. Simple question, very simple. For 5 marks, it can definitely be asked in the examination, right? So on that basis, I am giving you as homework. Just try it once, just try to apply the basic things, the absolute basics of the standard costing, the material and the labor, absolute basics you have to apply, right? And you will be able to solve it. Yes, what is the doubt, Anita? Illustration number 11, please ask. What is your doubt in illustration number 11? Go ahead. Yes, definitely, Hari. See, for exemption, the first thing is your concept should be clear. Second thing is your written practice should be there. Written practice should be there. Third thing, you should not only be depending upon the module. Practice the other questions also, right? The extra questions you must be practicing. So that is important. What is the doubt, Anita, in that? What is the doubt in that? Budgeted hours. Acha, right. 24 days into, yes, it should be 25 days, correct. What they have done is, correct, I got your doubt, Anita, I got your doubt. This is actually again the revised capacity variance that they have calculated as per the actual days. It should be 25 days here, right? This is what your doubt is now. 25 days into 120 machines into 8 hours. If you are taking the budgeted hours, it should be according to, everything should be according to the budgets. That is what you want to say. This is the doubt. Your doubt is correct. So actually they are calculating the capacity variance wrongly. In 2 questions they have done it. Institute, I don't know why they are not correcting these things, because it is continued from the various attempts. Okay, so I am assuming that question number 6 you were able to attempt, right? So we'll not take up question number 6 now. Question number 7 we have already done, right? Till question number 7 we have already done. So we'll move from question number 8 onwards. Good evening, Shri Vidya. Right? Let's start from question number 8 onwards. Question number 8. The following information is available from the records of the factory. The budgeted information is given and actual fixed overheads for the month is given 10,000 and 12,000. Production is given 2,000 and 2,100. Standard time per unit in the hours is given 10 and actual hours worked in the June is given 21,000. So you are required to prepare what? The fixed overhead variances. So standard hours for actual output, standard rate, standard cost, actual hours, actual rate and actual cost. Then we have the budgeted hours, budgeted rate and budgeted cost. Right? So what is the budgeted cost here? That is 10,000. Budgeted cost is given, that is 10,000. What is the budgeted hours? Budgeted hours is 2,000 into 10. This is the budgeted hours, sir. Right? For the budgeted output, what is the number of hours? 10 hours per unit. So for 2,000 units, it will be 20,000 hours. So budgeted hours will be 20,000. That is budgeted output of 2,000 multiplied by 10, right? Budgeted cost is 10,000, sir. Clear? Rate is what? 0.5. So standard rate will be 0.5, 0.5. What will be the standard hours for the actual output? The actual output is given as what? The actual output is given as 2100. So what will be the standard hours for 2100? That is 21,000. 2100 actual output multiplied by 10 hours, that is 21,000. So what is the standard cost, sir? That is 10,500. What are the actual hours? That is 21,000, it is given to you, and the actual cost is also given, that is 12,000, right? Divided by 21,000, that 12,000 divided by 21,000, that comes to 0.57. Otherwise actual rate is not required, sir. Clear? So this is the table for the fixed overhead variances. Now you can calculate any variance that the question is asking you for. Any doubts in question number 8? With this table, always in case of the fixed overhead variances, always try to start with the budgeted part. Once the budgeted part is covered, after that budgeted rate is equal to standard rate, fill up the standard rate. Then try to identify if you can calculate standard hours for actual output. The actuals in most of the cases will be given to you, right? So this is the order that will make the question little bit simpler. That's it. Okay, solve it. And any doubts in this particular question? Question number 8 we are done with. Quickly let me know if you have any doubts. Quickly, clear? So these are simple questions in between. Okay, let's move on to question number 9 now. Let's move on to question number 9 now. XYZ Limited has furnished you the following information for the month of August. Output is given, budgeted and actual, hours are given, budgeted and actual, fixed overheads are given, variable overheads are given, and the working days are given. Calculate the overhead variances. Simple. Now two tables will be prepared, one for the variable overhead variances and another one for the fixed overhead variances. Let's prepare it. So the first table that we'll be preparing is for variable overhead variances, right? That is standard hours for actual output. Rest is easy. It's only about the preparation of table. If you are able to prepare the table now, variances you can calculate. Standard cost, actual hours, actual rate and actual cost. Right, now let's talk about the variable part now. What is the standard hours for the actual output? Now this 30,000 hours is for a budgeted output of 30,000 units, right? That is, we can say that, sir, for the standard output of 30,000 units, what is my standard hours? That is 30,000. For an actual output of 32,500, what will be my standard hours, right? What will be my standard hours for the actual output? That is 32,500. What is the standard rate now? What is the standard rate? Standard rate means the variable overheads divided by the number of hours. Standard budgeted variable overheads divided by the budgeted hours, right? So standard rate here is 2 rupees, right? So standard rate here is 2 rupee. So what is the standard cost? That is 32,500 multiplied by 2, that is 65,000. What is the actual hours? Actual hours is 33,000 and actual cost is 68,000. 33,000 and 68,000. So what is the actual rate? 68,000 divided by 33,000, that is 2.06. So this is your variable overheads. Correct, 32,005. Clear? This is about the variable overheads. Now let's try to prepare in the similar fashion. Let's try to prepare it for the fixed overheads, right? I'll rub this. In the similar way, we'll try to prepare it for the fixed overheads. Right? So what will be there for the fixed overheads? Standard hours for actual output, standard rate, standard cost. Actual hours, actual rate, actual cost, budgeted hours, budgeted rate, and budgeted cost. Now we will start with what? We will start with the budgets first. Let's remove this. Okay. So what is the budgeted cost? Budgeted hours 30,000. What is the budgeted cost? Please be very careful here. Here we have to take the 45,000, sir. Here we have to take the, we are talking about the fixed overheads, because sometimes when there are the variable overhead and the fixed overhead, now we get confused. Instead of fixed overhead, we take variable overheads. Very careful, be very careful here. So budgeted hours is 30,000. Budgeted hours is 30,000. See, this is from the practical experience that I have seen students committing mistakes. That is why I am sharing this with you people, so that at least you guys do not commit a mistake. 1.5. विकी वो हो जाएगा, कल जैसे क्वेश्चंस किए थे हमने, अभी भी हमारे पास आज भी 2 क्वेश्चन आएंगे मिसिंग फिगर्स वाले. वो देखो, प्रैक्टिस करोगे तो आराम से समझ में आएगा हाउ टू डील विद इट, राइट, विद द प्रैक्टिस इटसेल्फ. 1.5, right? Then what is the standard hours for actual output? That will remain same, sir. 32,500, that will be same. So 32,500 multiplied by 1.5, that comes to 48,750. What is the actual hours? Actual hours is 33,000 and actual cost is 50,000. Actual rate is not required. Clear? This is the fixed overhead variance table. This is the fixed overhead variance table. Any doubts in this? Just be careful whenever there is a fixed variable overhead as well as fixed overhead. Now there you have to be very careful while taking the figures, right? Sometimes the confusion is there. In the table of fixed overhead we take variable overhead, in the table of variable overhead we take fixed overhead. So that kind of a confusion we need to avoid. We need to be very careful while attempting these kind of questions. Clear, sir? Any doubt in question number 9? Any doubt in question number 9? Please let me know. Clear? Himanshu says clear, AK says clear. Rest of the people, come on, reply at least. If it is clear, we can move ahead. Clear? Drashti says clear. Preetham says clear. Well done. Okay. Thank you, Vikash. Very horrible chapter. Please don't call it horrible. This is a very interesting chapter. One of my favorites. Please don't call it horrible. CA Inter 328 marks, 3 exemption, 60 marks, 45 in FMSM. Great. Very good. Well done. Congratulations. You cleared your CA Inter. Very good, Vikas. Okay, everybody is clear. So we'll move on to question number 10. So guys, it's an inspiration for you. You can also deal with it, right? Even if you are finding it difficult, you can deal with it if you have the inner voice that, okay, we have to do it. You people can also do it, right? If Vikas can do it, you also can do it. SV Limited has furnished the following data. Budgeted is given and the actual for the month of July is given. Number of working days 25-27. Production is given. Fixed overheads are given 30,000 and 31,000. Budgeted fixed overhead rate is 1 rupee per hour, and in the July the actual hours worked is 31,500. Okay, again fixed overhead. Let's prepare the table. Standard hours for actual output, standard rate, standard cost. Actual hours, actual rate, actual cost. Budgeted hours, budgeted rate and budgeted cost. Let's start with the budgets now. What is there in the case of budgeted cost? The budgeted overheads are 30,000. The budgeted overheads are given to us as 30,000. Now in this particular question, the budgeted hours are not given to you, but what is given is the budgeted fixed overhead rate is given, that is 1 rupee. So how many hours will be there, sir? Obviously 30,000 hours. Clear? Now standard rate will be 1. How to calculate standard hours for actual output? See, what is the budgeted output? 20,000. For this budgeted output of 20,000, what is your budgeted hours? Your budgeted hours is 30,000. So now you want to calculate what will be the hours for the actual output. Simple. What he's saying is that, sir, if your standard output is 20,000 units, what is your standard hours? That is 30,000. Now for an actual output of 22,000 units, this 22,000 units is what? This is the actual output. What will be the standard hours for this? What will be the standard hours for this? That is 33,000. 33,000. Right? So what is the standard cost? 33,000. Actual hours is given to you, that is 31,500. And the actual cost is also given to you, that is 31,000. That's it. So the table is over. This is the table for question number 10. Preeti, yes, initially in the first instance you might find it difficult, but slowly and slowly, as you will keep on practicing, as you will get to know how to deal with the questions, which figures we are going to focus on first, then what is the pattern of calculation. That is why I have told you, always start with the budgeted part, because that is normally given in the question, right? Either the budgeted overheads and budgeted hours will be given, or like in this question, the budgeted rate and the cost is given, so you can calculate hours. So budgeted part in most of the cases will be given to you. From there, move on to the standard part, then the actual part. Correct. Any doubts in question number 10? Please. We have prepared the table now. Now you can easily calculate any variance, any fixed overhead variance, and in this particular case, you can also calculate the calendar variance, because the number of days are given to you, 25 and 27. So you can calculate possible hours, right? You can calculate calendar variance, although it is not required here. They are asking you for only expenditure, volume and total overhead variance. But otherwise, because the number of working days are available, you can calculate calendar variance also. Right? Okay. Question number 10 is done. All set, all clear. Let's move on to the last 5 questions now. Question number Rohit, the previous year questions of standard costing, that will be covered in our costing all-rounder course, not here on the YouTube. Here every day we are practicing only the ICAI module, right? But if you will join the costing all-rounder course or the costing fast track course, one and the same thing, there you will find the extra questions of standard costing, which is from previous year, from RTPs, MTPs, whatever the different questions are there from the ICAI module, you will find there. Right, for all the chapters, not only for standard costing, for all the chapters you will find in there. You can join in from our mobile app KSJ Teaching. From there you can join in. Okay, so let's move on to question number 11 now. The following data for PG Limited is given, budget and actual, the production is given, man hours to produce above is given, and the variable overheads are given. Calculate the variable overhead variances. Okay, so calculate the variable overhead variances. Again, standard hours for actual output, standard rate, standard cost, actual hours, actual rate, and actual cost. What is the standard hours for the actual output? What is the actual output here? 360. What are the standard hours here? The standard hours is 8,000, but it is given for 400. So we can easily calculate here that for 400 budgeted hours, what is the standard hours? 8,000. So for the actual output of 360, what will be the standard hours? Divided by 400 multiplied by 360. 8,000 divided by 400 multiplied by 360, that comes to 7,200 hours. Yes, Hari. Standard rate. Now what will be the standard rate? Standard rate will be the standard cost of 10,000 divided by 8,000, right? So that will give you the standard rate here, that is 10,000 standard cost divided by standard hours. 10,000 divided by 8,000, that is 1.25. So this will be your standard cost, 9,000. What is the actual number of hours? 7,000, and actual cost 9150. 7,000 and 915. That comes to 1.307. Clear? So from here you can easily calculate the variable overhead variances now. Any variance you can calculate. Variable overhead cost variance, efficiency variance, and the rate variance. Any doubts in question number 11 now? Any doubts in this? We are done with question number 11 also. Easy questions coming up, isn't it? Really easy questions, sir. Any doubts in this one? All set, all clear. Okay, let's move on to the next one. That is the 12th one. अत्यंत सरल प्रश्न. Yes, अत्यंत सरल है. Mark it as important. Clear. Good. Question number 12. The following data has been collected from the cost records of a unit for computing the various fixed overhead variances for a period. Right? Yes, BR is equal to SR. Done. Number of budgeted working days is 25. Budgeted man hours per day is 6,000. Output budgeted per man hour is 1. Right? Budgeted, that is 1. Fixed overhead cost as budgeted is 1,50,000. Actual number of working days is 27. Actual man hours is 6,300. Actual output is 0.9 per man hour. Actual fixed overheads is 1,56,000. Now we will have to prepare the fixed overhead variance table. Now this is going to be interesting. Standard hours for actual output, and the standard rate and the standard cost and the actual hours and the actual rate and the actual cost and budgeted hours and budgeted rate and budgeted cost. Okay, so let's start with the budgeted cost now. What is the budgeted cost, sir? 1,50,000. Simple. 1,50,000. What is the budgeted hours now? Budgeted hours, sir, in one day 6,000 hours. So for 25 days, how many hours? Simple. 6,000 in one day multiplied by 25 days. That is 1,50,000 budgeted hours. So what is the budgeted rate here? 1 rupee. Standard rate 1 rupee. Now comes the actual calculation. Sir, standard hours for actual output. How we are going to calculate it? Sir, actual output we do not know. Sir, actual output we do not know. How to calculate the actual output now? He says in 1 hour you are manufacturing 0.9 units, right? So we are going to calculate what? We are going to calculate the actual output. We are going to calculate what? We are going to calculate the actual output, right? He says in 1 hour you are calculating 0.9 units, right? So if you are working for 6,300 multiplied by 27 days hours, so how many units you will actually manufacture? 6,300 is for one day and you are actually working for 27 days. So if you are working for these many hours, how many units you will be able to manufacture? Multiplied by 6,300 multiplied by 2,700 multiplied by 27, that comes to 1,53,090. This is what? This is your actual output. Now, what is the standard hour for this actual output? It is given in the question that standard hour for 1 unit, it is 1 hour. 1 unit, 1 hour is the standard hour. So for 1,53,090 units, how many standard hours will be there? 153,090. 53,090. So this is the important calculation in this question. Rest is simple, sir. Rest is simple. Actual hour 6,300 into 27 days, that is 1,70,100 hours. Actual cost is given 1,56,000. 1,56,000, right? 1,56,000 divided by 1,70100, that comes to 0.92. In this particular question, the important point was the calculation of actual output, that how will you find out the actual output, because without actual output we cannot find out the standard hours for actual output. Clear, sir? Any doubts in this question? This is a very good question. Question number 12, definitely a good question. Now you can calculate any variance. Any variance. Solve it and please let me know if you have any doubts in the question. Clear? AK says clear. Rest of the people, please let me know. Preetham says clear. Sandeep says clear. So I am assuming that for everyone it is clear. Right? Let's move ahead then. Let's move to question number 13. Again, this question number 13, mark it as very important. So all these questions which we are marking it as important or very important, now please go through these questions during the revision time, very important. And specifically which we are marking it as very important or very, very important, go through these questions again and again, right? You can also go through these questions in those 1.5 days if you have time. Definitely, Hari, definitely in every chapter and specifically in standard costing, so definitely yes. Definitely yes. There can be a variety of questions. Variety. Let's see here. JK Limited. Okay. Let's see. JK Limited manufactures NXE by mixing 3 raw materials. For every batch of 100 kg of NXE, 125 kg of the raw materials are used. In the month of April, 60 batches were prepared to produce an output of 5600 kg of NXE. The standard and actual particulars for the month of April are as follows. Raw material ABC, standard, the mixture is given, the percentage in which the raw materials are mixed, 50%, 30% and 20%, that is given. The actual quantity is not given, but it is given the mixture. Price per kg is given, the actuals are given, and the quantity of the raw material purchased is given. You are required to calculate the material price and the usage variance. Now, let's see here. Let's prepare the table. That is standard quantity for actual output, standard price, standard cost. Then we have actual quantity, actual price and actual cost. Right? Then that's it. That's it what we need for price and usage variance. Right? We do not need the revised standard quantity. Now, what is the actual output here? 5600 kg. Can you tell me what will be the standard quantity for actual output? He says, the standards says that, sir, for 100 kg of the finished good, 125 kg of the raw material is required. So for, I need space. For 100 kg of the finished good, 125 kg of the raw material is required. So for 5600 kg, how much of the raw material should have been required? Divided by 100 multiplied by 5600. Sir, total raw material that was required was 7000 kg as per the standards. Right, as per the standards. Now this raw material ABC, the standard says it has been mixed in which proportion, in which ratio, sir? They have been mixed in 50, 30, 20. So that is 3500, 2100 and 1400. What is the standard price that is given? 20, 10 and 5. 20, 10 and 5. 3500 multiplied by 20, that is 70,000, right? 21,000 and 7,000. That's fine, Preetham. Whatever the scanner or whatever the book you are using, extra questions, if it is having, that's sufficient. Whatever extra that you can practice, that's good enough. 98,000. Now, coming to the actual quantity now. Sir, actual quantity you have to calculate very carefully. What is the quantity that has been actually used? What is the quantity that has been actually used? That is important now, sir. How we will calculate that? He says, sir, what is given? It is given that for one batch, for one batch of 100 kg, what is the quantity required? 125 kg. If there is any loss or something, it is not given in the question, right? Now he says, sir, we have processed how many batches? We have processed 60 batches. So for 60 batches, what is the raw material that we would have consumed? Forget about 5600 kg. He said for one batch, 125 kg is the input that is required for one batch. And they have processed 60 batches. So for 60 batches, how much of the raw material they would have processed? They would have processed 125 divided by 1 into 60. That is 7500 kg of the raw material they have actually processed in the actual 60 batches. So this is 7500 here. So what is the actual this quantity here? 60 20 20. So 7500 into 60, that comes to 4500, right? 1500 and 1500. What is the actual price? That is 21 8 and 6. Actual price is 21 8 and 6. So 4500 multiplied by 21, that is 94,500. Right, 1500 multiplied by 8, that is 12,000, and 1500 multiplied by 6, that is 9,000. What is the actual cost here? 94,500 plus 12,000 plus 9,000, 1,15,500. Clear? Now you can calculate the price and the usage variance. Now you can calculate the price and usage variance. These two calculations are important. One is this calculation, another one is this calculation. One is how much of the total standard quantity for an actual output should have been used, and what is the actual quantity that has been used in 60 batches. Right, now you can calculate the price and the usage variance easily. If you will directly see the institute answer now, you will get totally confused what they have done. So once, this is the best way. We have prepared the table. Calculate the price and usage variance in the normal way that we have been calculating. Tally your answer will get tallied. Is it clear? Absolutely clear? Please let me know. Please let me know if it is clear. If you have any doubts, please ask. So mark it as a very important question. Question number 13, sir, very important. Right? Because institute can anytime ask these kind of questions. Can anytime ask these kind of questions. Crystal clear? Okay. Sometimes it is complicated, sometimes not. Right? Let's come to question number 14 now. The following data is extracted from the books of XYZ Limited for the month of January. Estimates are given. Particulars, material A, material B, quantity is given, price is not given. Okay. For material B, quantity 600, price 30, amount 18,000, normal loss. Normal loss was expected to be 10% of the total input material. Okay, the actual 1480 kg of the output produced for material A and B, quantity is given, for some price is given, and the total cost is given. Other information, cost variance and price variance is given to you. Required this. Let's prepare the table, sir. Once we are, if we are able to prepare the table, then rest of the calculations will take care of it. Question number is 14. So standard quantity for actual output, right? Standard price, standard cost, actual quantity, actual price and actual cost. Then revised standard quantity, because we have two different materials. So for material A and material B, whatever the information is given, first of all tell me what will be the standard quantity for actual output. What is this? 1480, 10% is the loss that is given. 1480 divided by 90%. Divided by 90%, that comes to 1645. Right? So the total here will be 1645. It will be distributed in which ratio? That is 8:6 or 4:3. $940 is here, right? And 1645 minus 940, that is 705 here. Standard price is given to you for B only, that is 30 is given. Standard cost is also given, that is standard cost is not required actually. So we'll calculate here. 705 multiplied by 30, that is 21,150. What is the actual data that is given? Quantity is given 900 here. Here it is the quantity that is given 900, and the price is given for B, that is 32.5. For B it is given 32.5. What is the actual cost? Actual cost, total cost is given 59,825. 59,825. This is what is given to you, right? Rest of the information that is given is the material cost variance is given. Material cost variance is 3625 favorable, that is 3625. And the material price variance is given. Material price variance is given 175. Right? So using this information, we have to calculate the missing figures question again, a very important question. So what is the cost variance now? Material cost variance is equal to total standard cost minus actual cost. 3625 is equal to standard cost minus the actual cost is given to you total 59,825. Right? So what will be the standard cost? 25 plus 59,825. 3625 plus 59,825, that comes to 63,450. So this total cost is 63,450, right? So from here we will be able to calculate what? Minus 21,150, that will give you standard cost for material A 42,300 divided by standard quantity of 940, you will get 45 as the standard price. This is one value that was to be calculated. Question mark was there? Yes sir, question mark was there. Price, that is the standard price of material A, we have calculated as 45. Clear? Now the next thing, sir, next thing to be calculated, price variance. How we can take it, sir? See here, just try to understand. For material A, I will take the actual price as X. So what will be the total cost? Total cost will be 900X, right? Total cost will be 900X. Another one will be, if I take here Y, that here I will get what? 32.50Y. So I will frame one equation from here. So my equation will be 900x plus 32.50y, right? that will be equal to what? 59,825. Sir, what about the other equation? What about the other equation, sir? For that we will use the price variance. So we will have to use what? We will have to use the price variance then. Will you try once? With the price variance, will you try? You can take the standard, the average price. Average price you can calculate, and from there you can form another equation, sir. You can form another equation, standard price minus actual price into quantity, right? Or how you can frame the equation, just try to find, listen here. What is the material price variance? Material price variance is standard price minus actual price into standard rate, right? So what is the for A, what is the standard price here? For A it is 45 minus X into actual quantity, sir. Actual quantity, sorry. Actual quantity, sir. Right? So actual quantity here is 900. For B it is how much? 30 minus 32.50 multiplied by Y. Right? The sum total of these two will be equal to 175. Another equation will be formed for X and Y. Another equation will be formed. What will be the equation? The equation will be 45, that is 40,500 minus 900x, right? This is one equation, plus 30y minus okay, I'll subtract this directly. Minus will be minus 2.5y, that is equal to 175. Right? So this is how the equation will be formed, sir. This is how the equation will be formed, that is 900x plus 2.5y is equal to 40,500 minus 175, that is 40,325. So this is equation number 1, this is equation number 2. Now we have to solve these two equations, right? What are the two equations? That is 900x plus 32.50y is equal to 59,825, and 900x plus 2.5y is equal to 40,325. Minus this will get eliminated, right? So this will be 30y is equal to 59,825 minus 4325, that will be equal to 19,500. So the value of y will be 650. Value of y here will be 650, sir. So here you will get 650. Right? Now you can calculate the value of x. What will be the value of x? What will be the value of x, sir? Please tell me. Correct. 1625. What will be the value of x here? I want to know the value of x here now. X is 43, absolutely correct, AK. X here is 43 that you will get. Now you can solve it. Now you can solve everything. Yes, correct, Hari. Absolutely correct. You need two equations. So we have framed two equations from here. Mark it as again a very important question. Again, mark it as a very, very important question. Please revise this question again. I'll show you the solution, don't worry. Any doubts in this question? Any doubts in this question? Understood the question, sir? Please let me know. Please practice all these questions again. I know it will take some time to understand these questions, but practice is important. Once you will start practicing, then slowly and slowly you will understand how to tackle or how to deal with the variety of questions. That is where the actual fundamental lies. Keep practicing, because the concepts are clear. The ultimate thing that is left is what? The practice. Okay, let's move on to the last question now, question number 15. Right, let's move on to question number 15 now. Paras Synthetic uses the standard costing system in manufacturing of its product Star 95 mask. The details are as follows: direct material 0.50 meter at 60 per meter, direct labor 1 hour at 20 per hour, variable overhead 1 hour at rupees 10 per hour. Total is there. During the month of August, 10,000 units of the Star 95 mask were manufactured. Details are as follows: direct material consumed is given 5700 meters at 58 per meter. Direct labor is not given. Total cost is given, but the labor hours are not given. That is a question mark. Variable overheads incurred are given, and he says the variable overhead efficiency variance is 2000 adverse. Variable overheads are based on direct labor hours. You are required to calculate the missing data and all the relevant variances. See, material variances you will be able to calculate very easily, right? No difficulty in calculating the material variances. 10,000 multiplied by 0.5 meter, you will get the standard quantity for actual output. Multiplied by 60, you will get the standard cost. Actuals are given. Material variances, no issue. But for the labor variances, you first need what? You need to calculate this, sir. Right? How we will calculate this? We will calculate it with the help of what? The variable overheads. What is there? Variable overheads actually incurred are given to you 1,12,200, and the efficiency variance is given, that is 2000 adverse. Right? 2000 adverse. What is variable overhead efficiency variance? What is variable overhead efficiency variance? Variable overhead efficiency variance, that is standard hours minus actual hours into standard rate, isn't it? So this is given as minus 2000. What is the standard hours, sir? What is the standard hours here? Can you tell me what is the standard hours here? So we can calculate actual hours also. Can you tell me the standard hours for actual output? That is 10,000 hours minus actual hours we need to calculate, multiplied by what is the standard rate? Standard rate is this one, 10 rupees. Standard rate not for the labor, standard rate for the variable overhead. Very important to be careful about. Standard rate about the variable overhead and not the labor rate, right? So 10 rupees here, 10 rupees here, right? So minus 200 is equal to 10,000 minus this. So actual hours is 10,000 plus 200, that is 10,200. Right? So one of the missing figures we have calculated, that actual hours is 10,200. So what will be the actual rate? 2,24,400 divided by 10,200. Actual rate here is 22 rupees. So the question mark, the missing figures we have calculated. Now you can calculate the labor variances also. Will you be able to do it? Now you can calculate all the material variances, you can calculate all the labor variances, you can calculate all the variable overhead variances. These are the three categories that you can calculate in this question. The fixed overheads are anyhow you cannot calculate it. Okay, quickly let me know if you will be able to calculate it. Other, the live classes are free every day, 8 o'clock we are coming, and 3 chapters are left for the live session. For the next 10-12 days we'll be coming live, that will be free. But after the live session is over, these classes are available in our paid batch only, right? These classes will not be available on YouTube, but these classes will be available in our costing fast track batch or the costing all-rounder batch, right? For live you can come, 3 chapters are still left: marginal, budgetary and service. We have just ended with standard costing. Okay, everybody please let me know if you have any doubts on question number 15. Again, mark question number 15 as very important. This is again an important question from examination point of view. हो जाएगा ना? ठीक है, बस इसमें यही calculation, this calculation was important, the rest is simple. So with this, we are done with standard costing. All the questions of standard costing we are done with, right? The end. So tomorrow we will be starting with what? Tomorrow we will be starting with marginal costing, sir. Standard R, this one na, see here, standard R for actual output. Actual output is 10,000, standard R is 1 R. Okay, 10,000 units into 1 hour, standard hours for actual output. Standard hours is what? The standard hour for actual output, na? Actual output is 10,000 units. Correct. Because the variable overheads are being absorbed on the basis of labor, so the missing figures we can calculate only from variable overhead variances. Okay, any doubts in the session, any doubts in any question or anything you people want to ask? We are done from my side, we are done with the standard costing, sir. We are done with the standard costing. Any doubts if you have? Good night, AK. If anyone is having any doubts, tomorrow we might keep an off. I have to travel somewhere. I'll let you know before the class, right? I'll let you know by around 6:30 or 7 p.m. I'll post it on this community, right? If it is an off, if the class is there, I'll schedule the class, don't worry, right? Then I will not post anything on the community. Next chapter also a big chapter, but a very easy chapter. You know, marginal costing is one chapter na, where you need to play with the questions. If you are able to play with the questions na, very easy chapter. And marginal costing is one chapter from where 99.9% of the times you will be getting a question. At least a 5 marks question in every attempt you are getting it from marginal costing. Yes, budgeted rate is always standard rate. So approximately 3 days we'll need for marginal, right? So even if we keep it off tomorrow, 23rd is tomorrow. So 24, 25, 26 we'll do marginal costing. Then 27, 28 budgetary, then 29, 30, 31 service. So anyhow by 31st of July or maximum by 1st of August or 2nd of August, maximum to maximum 2nd of August, we will be completing our syllabus, sir. We will be completing our syllabus. So we are pretty much on time, nothing to worry as such. Okay, anything you people want to ask? Anything? For tomorrow, I'll update, right? Okay, Kathiraman, no issues. Yes, variety will be there. Shreya, nothing to be done as such with the purchases. See, in 13th question, nothing as such to be done with the purchases. Nothing. Not required actually. Right, so forget about the purchases. That is given if you want to do it by the actual quantity, if you take it according to the material purchase, but forget about it. Don't take the purchases part. right? I don't want to confuse you people. So just leave the purchases. There is no role of purchases. Preeti, I'll update. Not 100% sure, right? 50-50 chances. So I'll update on the YouTube community by 7 p.m. tomorrow if there is an off. If there is no off, then I will not post anything. We will directly meet at 8 o'clock, right? So there is no certainty as of now. I have a plan to travel somewhere to some other city, right? If I do not travel, then we'll have a class, but if I travel, so I might not be able to come back on time. Thank you, Kushal, thank you. Please, all those who are getting good marks, Kushal, please give some reviews, or you can post certain reviews on the YouTube, or you can send us your message, video message, audio message, or a text message with your review that how you got 59, how the classes helped you, so that the others also get inspired by it. Please do post your reviews. You can give your review. You can send it us through mail, message, or you can post it on the YouTube also. That will be helpful for others also, for your friends. Thank you, Joydev. Thank you, Himanshu. Okay, no other doubts for today's session. Shall we close it? So the next chapter that we'll be starting with is marginal costing, another very interesting chapter, one of the best chapters and one of the most asked chapters in the examination, right? Okay, so see you guys tomorrow, right? Maybe tomorrow or maybe day after tomorrow, we'll see accordingly, right? I will update. I'll update on the Telegram also, as well as I'll update on the YouTube community also, right? So please stay tuned. By 7 p.m. I'll give you the update if the class is not there, but if the class is there, then I'll not post any update. We'll directly meet at 8 o'clock. Okay, so see you guys till then. Stay safe, stay healthy, keep studying, keep sharing. Thank you so much.